So welcome everyone. Thank you very much, Jean-Bernard Tanqueray, for coming into our class this time virtually. In the past, you came to the campus, but I think today it's better for all of us that you come here. Even though it's after COVID, we still like to use technology, in particular, since you're a FinTech company, and I think that's really the purpose of this talk here. Of course, this is an entrepreneurship class, and I think you've been here before. I think you came in the past to my wealth management classes, but as we say, plus ça change, c'est la même chose, right? When you come to wealth management or to entrepreneurship, the purpose is always to learn from the guest speakers, and you have a lot of experience in finance and in starting businesses. I think we've known each other for many years. I think initially from hedge funds and then from other purposes. And of course, you're also a dear friend to the university, to Regent's University. So we're very eager to learn from you, to hear from you today about Finlight, about your business, perhaps also a little bit about yourself, about your career. And perhaps after your presentation, the students can ask you some questions. So over to you, Jean-Bernard.
Well, thank you very much. So is that okay? We'll share a presentation. And you should be now seeing your screens. Yeah. And then we go into full screen. So, yeah, sorry, now I've got my mouse being a bit of a, it looks like, So hello, everybody. Just to give you a bit of a background before we dig into what Finlight really is about, one platform to launch and raise and manage globally. Just to give you a bit of an idea of where I'm up to, where I'm coming from. I say my career in the late 90s, it sounds like very old now to say that, in a Citibank as a fixed income derivative manager. Basically, running prop trading P&L on the fixed income arbitrage, really, on the government bond desk. And this took me to Fitch Ratings, where I was an associate rating financial services institutions, so banks and other likes, but with a focus on asset managers. And that's how I became a freelance fund selection for different, pension funds and investment consultants. And then I joined a company called Fortis Investments, which is now part of BNP Paribas, where I was managing a fund of hedge fund portfolio for French pension funds, Caisse de Retraite. It was a tiny allocation when I started. Then in 2005, it was only 30 million allocated to it, and we pushed the product to 250 million. And as part of that line between Fitch and Fortis, that's how Jacob and I met. As I too was one of Jacob's students, like you guys. So now it's just sort of, as I say, learn, earn, and return. And I think this is now the time to return the favor. And that's what took me the family office world, where I ended up, being a chief investment officer for a single family office between France and the UK. It was a low carbon mandate. And in the midlife crisis, I became an entrepreneur in 2016. So nearly 7 years ago, June 2016, to try and democratize financial services, which is what we called a cloud-based portfolio construction company, where you could put all your liabilities and assets and try and compute an ideal financial strategy around that. From that, the product evolved into a reporting consolidation software for family offices. Lots of family offices came to us to use that tool, but many of them struggled to get the data correct. And that's how we helped them consolidate all their data into one place across all assets that can start yielding these risk management, portfolio consolidation, risk management solution. Okay. But also what we learned is in financial services, if there's no regulatory impetus to make you change, people change very slowly. And it made the product growth very disappointing, not really what we expected. And this is how we evolved into this product we're going to talk about. And where we also, launching a company, it's a very tough moment. It's a permanent roller coaster. Every time you come to a view that you crack something, that you get there, you're going to really grow. The business, there's a lot of headwinds coming your way. Call that poor preparation, bad luck, I call it life. And with lots of ups and downs, you need to understand and use sector better. It's not because you've been working in the sector for the last 20 years before you became an entrepreneur that it's a guaranteed hedge against bad surprises, failures, and all the emotions around entrepreneurships. Actually, it puts you so much blind spot that it's really sustainable to get rid of the blind spot. And especially financial services is a sector where innovation is very difficult to try and force through, especially on a B2B space. Why? Simply because the sector's got so much money that it doesn't need to be more productive. It doesn't need to do things better. It just needs to keep on doing things the way they're doing, and that's fine. And I think, when we see Silicon Valley Bank collapsing, when we see the financial crisis in 2008, 2009, all these kind of elements, whether people should be more aware of that risks. I think the need to overcome the prudence, the desire, the willingness to earn more, prevails over everything, unless you're forced to do something differently, and that usually either come from crises or regulatory obligations. And this all things, this roller coaster I'm talking about, and all these elements I just shared with you, confirm that it took us, despite our sector expertise, about 5 years to really find our entrepreneurial identity, which we're going to cover later on. And also the fact you've come from the sector equips you very strong convictions about things that needs to be done. And that sometimes makes you very ineffective at understanding what the market tells you, says you about readjusting, readapting your own product and offer. But still, we managed to get good listening skill as we managed to build a network of private investors worth over 10 billion US dollars last year in 2022, where we received capital, either through the form of grants and equity investments, to develop something we call natural language processing, which is basically our in-house technology that reads and understands financial reports and is able to turn it into usable data format, which is really good. And also the big other things is, building and expanding our network of family offices, as I said, with this network. So trying to develop a business, you always learn things and you always manage to develop interesting assets in the form of networks and or technology itself, which enabled us to really listen and narrow down our needs. I know that only the market needs as to really concentrate more and exclusively, not just on multi-asset consolidation, multi-asset reporting, but really on how we can make private asset investing simpler and smoother. Indeed, as we were speaking with our clients, with new regulatory changes occurring, we realize now 99% of general partners of funds, whether they're based in the UK, whether they're based in the US, with the EU, can no longer legally raise money from non-domestic LPs. LPs being limited partners, i.e. invested in the fund. So if you want to create a venture fund, a property fund, a private equity fund, a buyout fund, let's say regulated in the UK, you can, of course, raise money from the UK based investors, depending on their own categorization, whether it's sophisticated or not sophisticated. But you cannot open a Eurostar and try to raise more money from Paris or Brussels, hop onto a plane and go to Luxembourg or Frankfurt or the US, because regulators is what create inefficiencies in that space, in that sector space, and many of them are being very, very protectionist, simply because they want to protect their own market, or under the desire to protect local investors, makes barrier to entry extremely high for foreign fund managers to come and raise money. Therefore, me I'm a London-based GP, and I want to raise money, let's say, from France and Germany and Switzerland and Benelux, so Belgium, Luxembourg, and the Netherlands, because there sits a lot of money, a lot of investors I want to deal and work with. Then I need to go through lots of different paperwork, usually through lawyers so far, to have my fund registered for marketing distributions in these countries. Otherwise, it's illegal for me. It's illegal for my clients to allocate to my funds if I don't go through that stage first. Lots of investment advisor learned at their very own expense that not checking the fund is speaking to is duly registered for distribution in their own jurisdictions leads some of them losing the right to do and conduct business as an investment advisor, be it for institutional clients or private wealth. On top of that, lots of funds used to rely, especially US funds, used to have a feeder, i.e. a fund they invest in their own funds to consolidate smaller and foreign investors into one single fund. Usually that fund used to be based in Cayman for the simplicity of tax reporting there. But all these offshore jurisdictions are the risk of being on many regulators' exclusion list, typically. If today you raise a fund in Cayman to raise money from investors in the EU actually put Cayman on the grey list because they're not very happy with the way they are transparent from tax purposes. Therefore, you may find yourself investing in a product, in a fund, I mean, that is illegally, and for which it's illegal to invest in 2 years or 3 years down the line, because your national regulators have decided that this domiciliation no longer works. So that's created a lot of legal uncertainties. As a GP, I've got to go through a lot of paperwork therefore to raise money, but also I'm not certain that my my fund structure will be legal and remain legal in the jurisdiction I want to raise money from, because let's say I'm a venture capitalist, I want to have investors in France, in Germany, in the UK, in Benelux, because they are quite startup hub based, and I want to have local connections there, because as a VC, I want to have a great network to source good deal, etc. So I need investor there that's going to help me, and I need to make sure I can speak to these investors in a safe fashion. Okay. And last but not least, before, when you were raising money for such funds, PE, VC funds, you would rely on one mechanism called reverse solicitation, where you would say, this company has asked me to come and sit there because they saw my name on the database, or I was recommended to them through common connections. And that is no longer be able to remain an excuse, because as we're seeing here, here's the French regulators, but the European regulators follow, the French regulators' path. Reverse solicitation, i.e. me pretending to be contacted by my client and not the other way around, is going to be turned into a very exception to the rule, meaning that I need to be able to, that I could directly solicit investors in my target jurisdiction, and I can no longer pretend they asked me to come, because this is going to become very difficult to prove. So all this, and sorry for this long explanation. I know we're on Zoom and I don't see you, so I don't know whether you're really connecting with what I'm saying, or whether I'm being too technical or too boring here, and I apologize for that. But what I like to say that there's a need today, thanks to regulatory changes, there's a need for fund managers named GPs, so general partners of PE and VC funds, to embrace a radically new and legally proof approach to fundraising and fund structuring. They need to be able to have funds where they can access and pre-qualify and relevant LPs very easily across multiple jurisdictions, with meeting institutional local standards to reassure local allocators, whether it's a pension fund and things like that. And this is where all the technology and therefore this is where, let me just jump on board a few slides. And this is where all the technology we developed before, all the investor community we built before, enables us to turn around one time this business, Finlight, into this fund structuring and management platform where VCs, GPs can use Finlight to create funds, EU-based funds for EU investors, UK-based feeders for UK investors, or Delaware-based funds for US investors, from one place without having to spend thousands and multiple lawyers, because we give them reasonable templates for them to create such structures with all the relevant regulatory approval from AFMD and things like that, and the different stack they need to monitor all these funds. From there, I'm a GP based in New York. I want to raise money from European investors. Finlight give me that feeder, that structure to do so. So that's great. But better than that, thanks to other LP technology that we talked about before, we can have all these funds administered onto our platform, because all the information we receive and these people handle is unstructured information, unstructured data. And our NLP technology we talked about is actually here to turn this data into an unstructured analyzable format where they can automate the onboarding of investors, the management of their investor books, get all the information needed from the bank accounts, do the reconciliation, compute the net asset value of the funds, which is the most recent value, therefore the performance, and manage all the relationship with NLP, with distribution, reporting, distribution, capital call, and things like that, all sorted automatically with an operation framework meets institutional investors' requirements. So the so-called SOC 2 operation here, which is sort of an operational risk framework that reassures everybody that you shouldn't have a break in your reconciliation, or you should not be having poorly managed operations. So that's the core thing that Finlight does from a technological point of view. And on top of that, it affiliates different networks of investment advisors, investment consultants, and investment marketing professionals, where those funds can access and connect with the community of LPs, where they can run virtual roadshows to engage with 10 billion plus USD community of people looking to allocate that part of the money to this asset class, with all the due diligence questionnaires and processes automatically managed, and where they can see who's interested in them and how they can take advantage of technology to be distributed across different channels, banks, institutional investors, new platforms like Moonfairs or Titan Bay from one place, and therefore manage that more effectively. We're taking care of new form of financial structuring, like issuing notes to raise money from smaller investors, or syndicate them in different tools framework together, so that it costs them much less money to handle. So it's really a platform with, as a GP, you find the three things you need to be able to launch and raise funds globally: get my fund ready with minimal legal costs, get the administration sorted without having duplicate manual tasks, because everything's happening in one place, and no need to have multiple providers to use, and simplify my fund distribution in the most compliant framework where I want to raise money from. That's basically what Finlight does. And thanks to that, we're now experiencing the growth that any startup needs to experience to survive. We're tripling our turnover, and that's really exciting. We keep going up despite the crisis that agitate the PE and VC world at the moment, especially with the bankruptcy of Silicon Valley Bank. And despite that, we actually, crises are our friends, because it forces GPs to be way more efficient in the way they handle their fund structure, their relationship with investors, and keep costs down. This is where for them, and this timing is really good for us, and we're growing very well, with lots of overseas US-based investors using our platform to sell in Europe and reciprocally. Basically, thanks to us, we've got one single front shop to distribute with full compliance and streamlined structuring. Just checking on time whether I'm not speaking too much. These are the key advantages as people have by using Finlight. They've got a few clicks, they're ready to launch and distribute. And on the GP side, we produce all the information LPs require from their GPs, so that LPs can allocate to funds more rapidly in a few clicks too. And this way, we really, thanks to this lengthy roller coaster, we've really managed to fulfill our true self. What I'm trying to say here, and I think it's very important as an entrepreneur, is to be doing something that is strongly in line with what you want to do with your life. I know it sounds a bit overly philosophical to say that, but when you leave the comfort of a well-paid salary job, you need to know what you're going to swallow, what you're going to stomach problem for, and that's because you really need a drive that goes way beyond material necessity. It's something that's got to come from a strong personal life anchor, and in our view was really about making financial services way more accessible, much simpler, and now by becoming this one-touch platform, or operational streamlining everything. Our vision we want to really deliver here is to make investing into VC or private equity fund as smooth, as simple as buying public stock on an app, basically. Which is where we believe we're going to bring true innovation to the market, because instead of going through intermediary rich, paperwork prone environment, it's going to be made extremely simple. I mean, it's going to be made as simple and as liquid as you would expect from a stock trading app. So now our size of assets, client size are much doubled since we've been talking about 10 billion. And in fact, as I was computing the numbers today, we're now about a 20 billion asset size wealth community, which means we're growing total assets callable for the asset classes. We've got over 400 registered users. Most of the active LPs are investors in the UK, France, Benelux, and the US, with lots of funds coming from the US, UK, France, Israel, and Switzerland. We're consolidating our distribution network, offline and online, with strategic partners in the UK, France, Luxembourg, and Switzerland to begin with. The key learnings I'd like to share with you if you want to create a company, whatever your background, whatever your available pool of money to put into that, we should always keep in mind that building and launching a business idea is only 1%. 99% is perspiration. Is the ability to swallow problems over and over again. We went from a beginning of exciting growth with COVID time. We had an investor who collapsed, and therefore, November 2021, we nearly failed. It took us a lot of courage and sacrifices to keep the business going and pivot it around. By taking advantage of this regulatory pressure I was talking about, to really accelerate our growth and make it, a viable business. But therefore, the question every entrepreneur's got to ask itself is where to put the limit between perseverance and stubbornness. You can always persevere because you know your market is learning, you're educating the market. It can take time. It's difficult to get a message across, especially when you've got strong convictions. How to use streamline communication, make it accessible and understandable by the market. For me, it was a massive challenge because I tend to talk too much, as you can see, and I have too many ideas, and by willing to be as exhaustive as possible. So learning this communication with markets, and therefore people, without you persevering and getting the message across, or are you deluding yourself and being stubborn? Are you trying to push for something nobody wants? Are you an evangelizer, a preacher, lost in the deserts like Don Quixote, trying to fight meals in its native Renaissance Spain? Or are you really building something that people will want? And I found this very border limit between stubbornness and perseverance very difficult to isolate. And if you were to launch a business, what I would really suggest you to do is to authorize to pay yourself a bit of money. And if you get yourself a very clear KPI, okay, I'm not paying myself if I fail on that KPI, because I need that KPI to be filled within such amount of time by this date. for my business to carry forward. And even if you've got lots of savings and to create your own business, to support your lifestyle while you're building your business, even for that matter, do not authorize you anything if you don't hit the KPI you gave yourself for the week or the month. And that's what I think will enable you to, to recognize when to persevere versus when being stubborn. And that's very important. That's one of the key. That was one advice I would give. With hindsight, that would be this one, based on what I went through before. And of course, everybody talks about agile, being agile development, being lean product, lean startup, things like that. These are very difficult concepts I found on my side to really implement, simply because it's intellectually speaking, it makes sense, but what does that really mean concretely? And that's why these two needs to be really, 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 really related together. Just to give yourself the ability to understand that you indeed are working on something people are interested in, will be interested in, will go big. And to go big, you need to be able to, of course, make somebody's life simpler, but with the opportunity of making it super scalable, and of course, developing your own data sets that has a lot of value, and people will be prepared to pay a lot of money for. And of course, I remember when I went for an elective class at Harvard Business School as part of my MBA, the teacher used to say, an entrepreneur goes after every opportunity, whatever the cost. And although it can sound contradictory to what I just said, if you're really sure that what you're going to do is going to be super scalable, give you a unique set of data, people will need and want to give you an institutional edge, then yes, you need to be ready to support the cost, whatever they are, for the long run, because you know that's how you're going to recoup your investment. And when you apply that to financial services, what I did learn is people are not interested in working better. They're not interested. It's like giving up smoking. You know, you should stop smoking one day in your life, but until you don't feel forced to give up smoking, you will not give up. Or it's like going to the gym. You know, you've got to do it, but unless you've got an inner drive or an external necessity to do it, you know you've got to do it, but you sort of do it when it suits you, basically. And selling technology is about selling a better way of doing things. And you really realize, especially in financial services, people are not interested in doing things better because they can afford to keep on going the way they are. And therefore, whatever the cost principle I would share with you, if you think you've got a better technology than anyone else to do the job, don't try to sell them the technology, just do the job. Just become a competitor, whatever the cost it takes, but because it will give you so much advantage in terms of commanding margin growth, margin rates, that you know you will win the market. As one of my mentors used to say, multi-billion businesses are not built by doing things, but by trying to help people do their job better. They're just made by just making an existing job better than anyone else. And just by reinventing the wheel better than anyone else. So without further ado, thank you very much. It was a sort of a kind of bit of elements to share with you how we moved from being a cloud-based portfolio construction software to a one-touch platform to launch, raise, and manage funds globally, either VC, either GP, to make this world a bit, this sector, a bit more efficient than it has been so far. And I hope I've not lost you. Feel free to ask me every single question you may. Here are my telephone number and my email if you need to get if you need to reach me.
Thank you so much. Thank you very much. We're all
Thanks
excited.
for your patience.
So first of all, get you a round of applause, and then we're going to ask you a few questions now.
Very much.
Perhaps any questions here from you guys? Okay, so we have the first question. What I'm going to do is I'm going to turn around so you can see here our esteemed students here. And where are you sitting here? Okay, I think it should be okay. Yeah. So why don't you go ahead and ask the first question? We have Kate.
Yeah.
Kate has got the first questions. Please go ahead, Kate.
First of all, thank you very much for sharing your stories and give us some of your tips and advice. So I need to be more clear on, you keep saying is the raising money.
Yeah.
Do you work with the startups? Because I can clearly see that you are focusing on asset management, on tracking records, etc. So can you give me a bit more specifically on startups and what do you offer to startups and actually how you make money? Is it like purely venture capital structure, or you have a different structure, the way your company is actually offers as startups? Yeah, I don't know where to look. I have two screens.
So let me rephrase just to make sure I understand your question. You're asking me what the platform offers to startups. Is that correct?
Yes.
For fundraising purposes. At the moment, what we do offer startup founders is the ability to consider their investors into one of the funds I give you, so they don't have to manage multiple shareholders on the cap table. We try to keep that simple. Of course, because we have a network of VC becoming our own client, the idea will be to expand the community and include it and open it up to startups so that they can go after VCs that are clearly recommended by high quality LPs and high quality entrepreneurs. All VCs sitting on our platform needs to have a few references, and that is data that will also be interesting and relevant to startups to know whether or not they should contact that VC. At the moment, we're not doing the connection automatically between startups and VCs, but that's on the roadmap. Or what can startup get today from us is the ability to consider their shareholder into one vehicle and also understand which funds are worth looking at or contacting based on their own fundraising needs.
Okay, so it's basically you focus more on consultant startups.
So we're not really offering consulting. We're giving them data for them to decide whether yes or no GP or VC fund is relevant for them.
All right. Thanks.
Other question? Shaya?
What can I say? Did you need certain FinTech licenses, and if yes, what was the process to get them, and how complicated is it?
I'm sorry, do you mind repeating the question a bit louder? Because it comes from very distant.
Perhaps let me just rephrase it here. Okay, so Cheyenne asked of whether you needed any or you need any licenses in FinTech to operate. Also, perhaps may I just clarify? So you're working with VCs, GPs, and LPs, but you are in a way you are a startup yourself, or you were a startup, a bit more developed, right? So you are on both sides, so to say. You were a startup, you started this Finlight platform, and you're now working with GPs and LPs, right?
Yeah.
In order to help them in raising money, managing investment, and so on. But perhaps coming back to Cheyenne's question about these the licenses and the question of how do you operate, what kind of license authorizations are you regulated by the FCA? Perhaps that's one question, or by BaFin or the IMF or whatever.
Yeah, so the tech platform around, creating a fund, managing and administering a fund, it's a tech per se. You don't need to be regulated for that. Well, we need regulation though, and we've got AFME regulation in Luxembourg and FCA regulation here in the UK. Is basically on engaging the community to look at funds. Some people do not necessarily get regulated for that matter because it's just like like a pitch book like experience, but we decided to be regulated so that we can really how the community engage with the investment opportunities and have the ability and to demonstrate how we qualify whether yes or no such information can be made available to such and such investor category. So for that matter, yes, we are regulated as investment advisors in the UK and alternative investment fund managers in Luxembourg.
Okay. Another question from Kate.
Another question, what really makes you different from your competitors?
So what do I mean to be better at from my competitor? That what you're saying?
What makes you different? How are you better from your competitors? Perhaps you can talk a little bit about your competitors. Who are your competitors?
So my competitor in the UK is very clear. It's Vauban. typically, is one of my competitors, the fund structuring place. And in the US, it's Flowink. And actually, Flowink is the closest competitor to what I'm doing. It's based in the US. So what we do better than Vauban here in Europe, UK, Europe, is the fact that we engage investment community, and we have a regulatory umbrella, which Vauban doesn't. Vauban plays strictly on the tech side of things, and where we better and with Flowing, which is exactly what they do. They're based in the US, we're based in the UK, covering the UK and the rest of Europe. So we don't look after the same category. Where I would have argue about a difference is the fact that we enable our clients to have what they call passported structure, where they can raise money from multiple jurisdictions at once, which neither Vauban or Flying offer today.
Since you manage umbrella, is like what is there a specific area where you provide an umbrella? Is there a specific financial areas you actually provide in the umbrella services?
So when I say umbrella, it's regulatory umbrella indeed. So basically, you've got a concept in the UK, which is appointed representative. If I'm regulated by the FCA, I can put under my regulatory umbrella third-party structure and to my own regulatory approval, so they can conduct business. So that's how this works in the UK. In the EU, it's more like they call a MANCO, management company with AFMD approval, so that they became affiliate of ours from a regulatory point of view. So the kind of umbrella is authorization for distribution, really.
I understand what the umbrella is and how it works, but my question is, are you like, is it just for umbrella for consultants, for wealth management, for peer courts, for
fund distribution? As I said, fund distribution, for fund distribution and for marketing purposes. Yeah.
Thanks. For microfinance.
Right.
Thanks. That answers the question.
Okay, any other questions? So let me perhaps ask a few questions. Okay, now these were the easy questions. Now I'm going to ask you a few difficult questions.
Time to be green, is that what you're saying?
What are now come the difficult questions, okay? What are your plans? What you want to achieve with your business Finlight? So you said you set up in 2016, you went through different iterations of, kind of trying to figure out what to do. I remember a few years ago, the firm had a different name brand, you rebranded, you kind of changed direction. We're not going to mention the name. Can we mention the name, the previous name?
We started as Strip Your Banker.
Strip Your Banker and so on. So it was quite interesting. It was called Strip Your Banker, then you became Finlight, and you changed a few times. So you were really,
we changed
twice and so on. You said, like you mentioned, like last year, 2 years ago, you almost went bust and so on. So you're a true a startup, true entrepreneur, almost like some of the Israeli firms or some of the Swedish firms, Austrian firms, who kind of tried again and again. You need to get up on your feet and so on. So what are your plans from here? I think you found a very interesting niche, which is kind of helping with the structuring and umbrella and authorization and distribution. I think with this FinTech angle, where do you want to take it from here? What is the kind of plan? What is the plan in terms of exit, perhaps?
Yeah.
In terms of valuation and so on. Perhaps you can explain a little bit there.
Yeah, so in terms of plans, so basically we're building a sort of a fully digitized fund administration platform, really, with distribution capabilities. So it's to really push that offering to different alternative investment product types, PE, VC, and beyond. I want to start buying competitors in local markets like France, Germany, Benelux, the US, in 18 months' time, to really sort of build a thing. And my view in 5 years' time is to go for an IPO as a financial services group. And when we do that, so another thing I want to really create is to start an incubation, a VC/GP incubation services to really enable everyone to become their own VCGP, if I say, with some support capital and know-how, and really consolidate that into a form of, the VCGP equivalent of affiliated manager group in the US.
Okay, interesting. A little bit perhaps about the current size of your firm. You said you're totally, so you're a platform, you are automized and so on. How many people work for you? How many people do you need?
6 today.
So, because some of the students here, they want to send you their CV.
Yeah, so if you want to try growth marketing, SEO management, and data analysis and sales support, please send me your CV. I'll be very much interested in that, because this is what we really want to grow from a commercial side of view. Of course, you keep on hiring IT people with some AI knowledge. That it's always something I'm looking to hire. But I really want to strengthen the marketing function, and after that, the financial function.
So how much, since you're a platform, a FinTech, right? So how much is still manual? You said you need to strengthen the marketing. How much of the marketing is actually platform, and how much is off-platform people? You need to pick up the phone and phone a large investor, or phone the people you want to onboard and so on, right?
So yeah, there's always a bit of an element touch in a way, but at the moment, you're right, the marketing is predominantly manual, it's outbound and manual. Yeah, absolutely. To engage the LP community. Interestingly, from the GPs, they're inbound. GPs looking to become clients are inbound demand, because they have a clear need. I want to create a fund. I need regulatory capabilities. Capabilities is the right word. I want something from regulatory hurdle free, and that is a very qualified inbound demand. We receive 3 to 4 a week from such demand. So and then we have to automate to find a way to grow automatically that number of inbound demand. Okay. And where we want to be truly platform the products today, yeah, we still help and support our clients to onboard themselves. And of course, from a purely platform point of view, we want the onboarding to be fully automated. I come here, I upload all the information required. I get my SPV fully, or my feeder, my phone fully created. And I've got, like you buy a home insurance online. So that's where we need to push the products towards from the GP side and from the LP side too. So that still requires product improvement. And for that matter, you also want to have a growth task force to make sure when these people, A, to keep improving the products, and B, to expand automatically the top of the funnel and move people automatically from one side, from one stage to the other in the funnel.
In terms of markets and clients, of course, you have on the one hand the GPs, on the other one the LPs, right? LPs you distribute to the LPs, GPs you onboard and you work for, and you do your regulatory work and so on. Where's as much as I understand, you have 3 markets, right? You have the UK, you have Europe, and you have the US. Yeah. I think you also have Israel and perhaps a few others and stuff. But where's the growth? Where do you see the best growth, the best potential on the GP side and on the LP side?
So the GP side, still, I think so. The bulk of the growth, I think, will come from Asia. Okay, that's true. But at the moment, and the US, but if you go in terms of growth comparative, next got to be the US, because the US they really want, they're very used to the idea of building funds globally. So I think the next bulk of growth will come from the US, and actually we can see it already. Inbound demands come from GP, but in the US and Israel. By the way, Israel is a very interesting place, and actually I'm flying to Tel Aviv, so it's my last platform. I'm flying again to Tel Aviv in June, for that matter. When I think the US systems for a strong template, which is easy to scale, where you can get, what I'm trying to say here, when you can demonstrate the US and your natural clients, it will be a good benchmark for Asia. Because that gives a stronger credibility, And we believe Asia will be the next place. Once we get all the US in GPs to use us to be present in Europe, I think the next phase of growth will come from Asian funds.
So last question. Of course, we have to ask this question. We've had over the last 7 days a mini banking crisis with SVB. Has it affected your business?
And very clearly,
and your clients, more importantly.
Right. So our clients were not necessarily banking with Silicon Valley banks, so that was fine for them. Very clearly, I was about to sign an agreement with Silicon Valley Bank where we would be the structural, because Silicon Valley Bank was one of the key investors in my closest US competitors, and we're discussing a partnership to use us to cover Europe, so that one day between Flowink and us, we can decide who's going to buy who. And of course, Silicon Valley Bank going under, the idea of partnership is just an idea. Back to square one. And then the question is, do you want to buy their competitor, Silicon Valley Bank, with a shareholder of? That's where the crisis is impacting me now.
Okay, good. Any other questions here? If there are no further questions, then I would like to thank you. It was very interesting to hear from you. Of course, to touch base with you. You came to class 3 years ago. You remember that?
Yeah, I do.
On campus. And it's very nice to see that you've developed even further. You've refined your business model, and still full of enthusiasm. And you are kind of now reaching out to the US and to Asia, and of course here in the UK and in Europe. And you're providing very interesting service, a very interesting product. And it's a pleasure listening to you, learning from you.
Thank you.
I hope to stay in touch with you. Thank you so much.
Absolutely.
Thank you.
I look forward to hearing from you guys. Thank you very much. Bye-bye.
Bye-bye.